All right. Welcome, everybody. So glad you're here today. Welcome to our new buyer seminar. So today we just wanted to introduce you to us, our team. Um, we are the Arizona Value Builders team. We've been in business. Lynette Clemens, who is in this photo right here, as you can see in this gray t-shirt, she is our team lead, and she's been a realtor for, I believe, 20 years now. I've been on the team personally for 6 years. Gina's been on the team for, I think she said she was coming up on 9 years. And I know Anupama has been an agent for over 10 years with Keller Williams. Um, and she's been on the team with us for, I believe, around 5 years. So anyway, we've been together for a while and we really work well together. And we really wanted to create this team unit where we can collaborate and help each other out. Also help support our buyers as they're going through the new buyer process and to have all the support that they need. We have a lot of experience in buying and selling homes, and we wanted to make sure that we had a team that could help each other out, which I think we've really created amongst ourselves as a team unit, because we just want to have the best experience for people who are looking to buy a new home. And we want to make sure you feel supported. And if one of us isn't available, someone else would be available for you, because sometimes we get busy and we have, you know, a lot of things going on all at once, and we're all moms and we all, go on trips and we try to have this work-life balance. So it works really great to have this team unit that works really well together. And we really do. We really work very well together. And we have, I feel like we show that in the way that we treat our people. Um, so just wanted to give you a little bit about that. So we're going to start by talking about buying a new home. So congratulations, you've already taken the first step on your home ownership journey and you've become interested in buying a new home. So I think that is the biggest and most important step. I think sometimes we have a lot of fears and a lot of blocks that prevent us from making that decision. But really what it comes down to is a decision, whether that means you're going to buy something right away or you're going to buy something down the road. It really just comes down to making a decision. So I think that's super important that, you decide. And once you've had that decision made, then you can start the process. So today we're going to talk about a few things in this presentation. We're going to talk about the fears that I find buyers typically have when it comes to buying a new home or becoming a homeowner in general. We're going to talk about the realities of our market today, and we're going to talk about 10 steps towards home ownership and what your next steps are. We also have our lender, Teresa Dempsey, here with us, and she's going to be presenting on the lending side. And we also have Kim here from Driggs Title, who is going to be very helpful, I believe, for helping us to cover what title's role in everything that we do. So thank you so much for being here. Okay, so fears. Okay. So some of the fears that I find that come up a lot for new home buyers is that you're afraid you can't afford to buy a home, right? It's a fear. It's a common fear. I think a lot of people wonder about that. They take into account not only the mortgage payment, but they take into account home maintenance and things like that that come along with having a new home, especially if you've rented for a while and you've had that sense of security of knowing that you have a landlord that's going to take care of home maintenance and things like that. So this fear comes up a lot. But the fact is, until you do the math, you don't know what you can or cannot afford. And I think it's important to get the facts and to know. And a lender will really help you do the math on that. And you can gather information and learn what it's going to take to own a home and what you need to be prepared for and to really look at the numbers. And I think that really eliminates a lot of the fear of wondering if you can afford to buy a home. So just getting those facts. Another fear that I find that comes up often is that I should wait until the market gets better. Now, I know with interest rates being where they are, I know that this is a fear that's been coming up a lot. People are wondering if those interest rates are going to drop. They're kind of, hanging on to the edge, just kind of they're interested, they want to buy, but they don't want to buy at the wrong time, right? But the truth is there is never a bad time to buy the right home. If you're in a situation where you're renting, or if you're in a situation where you need to relocate and you need to find a place to live, it's never a bad time to buy. There's always going to be options down the road. If you buy a home now and it's at an interest rate that you don't like, once interest rates come back down, maybe at one point, then you can always refinance. So you're never locked into a situation when you're buying a home. So it's never a bad time. The third fear that I find that comes up a lot is that you don't have the money for the down payment. And Teresa will probably send you some more information about this, as far as like different programs that there are available. But there's a variety of down payment options available to you that you could look into. And also, too, there's other ways that you can find money for your down payment. It doesn't necessarily have to just come from you. So anyway, so Teresa will talk to you more about that. Another fear is that I can't afford to buy a home because my credit isn't very good. And the fact is there's always options. Now, maybe your credit at one point right now won't put you in a position to buy a home. But it's always to know a starting point and get yourself on a plan towards improving your credit. And there's a lot of options out there to get you on a plan. And sometimes your credit score might not be as bad as you think it is. And there's a lot of different lending options. So again, talking to a lender more about this will really help guide you in this. Another fear that I see come up and our team sees is that I can't afford to buy my dream home. Like, they don't want to settle for anything less because they just have this idea on what the perfect home is. And if they're spending all this money, that they just really want to get into the home that they really want. But the fact is, the best way to get closer to buying your dream home is to buy your first home. Because once you buy and purchase your first home, then you're going to be able to build your equity up so that you could at one point be able to purchase your dream home. Okay. It is going to be the way for you to generate more wealth, increase more money, so that when you do find a home later on that you really want, you'll have enough equity in your home that you have purchased to put onto something that's closer to your dream house. So, buying, I always recommend people just getting into a home. I have a sister that has the same fears where she just has put it off, and now she regrets it because she knows now how much a home costs now. And if she would have purchased the home that she was looking at in the beginning, she would have had enough down payment to get the home that she really wanted at this point. So never let that be a deterrent for you. The next fear I want to talk about is that I should wait until I'm certain about my domestic future. This one to me is it comes up because I think people, especially if you're single and you're not sure what your future is going to look like, maybe you're just graduating college and you're just starting a job, and and you're trying to you don't know what your future is going to look. You don't know if you're going to be married, if you're going to have kids, or and you're wondering if you should just wait until that all comes together. But the truth is you do not have to wait until you are married, partnered, or ready to have children to buy a home. I have a lot of single people who have purchased a home at a very young age who set their future domestic future up because they purchased a home already. Another fear that comes up a lot is that buying a home seems way too complicated, right? But here's the thing. Once you get into the process, you're going to have a whole team. You're going to have um, you're going to have agents, you're going to have a lender, you're going to have an appraiser, you're going to have an inspector, you're going to have a title company, you're going to have a team that's going to help guide you through the process. I don't think any of us would ever tell you that buying a home was easy, but having a team set up to support you through the process is going to be key, and it should help eliminate those fears. Another fear that comes up often is that I should pay off my student loan debt before buying a home. I was in this position. My husband is a doctor, and he had a ton of student loan debt when he graduated. And, there are so many lending options that really take into account, because there's so many different options with how you're repaying your student loans. So student loan debt does not prevent you from buying a home necessarily. So just keep that in mind. Okay. So those are the top fears. So this is not completely accurate as far as like where mortgage rates are right now, I think. But this just kind of gives you an idea on why it's important to buy now, right? Interest rates are still historically low. Okay. I'm sure Teresa can give you more of a accurate picture on what interest rates are looking like today. But they are historically low. And also your long-term investment grows. So your equity builds up, your value appreciates, right? Your debt continues to be paid down, towards where you're going to be owning this home. So as you can see with this visual of the same home, as it has increased value over time, kind of gives you an idea. And we don't foresee that really ever changing, where it's going to grow as you continue to own that home. Another thing to really look at is, just having a home gives you really some pride, I think. It gives you stability and security, sense of community, freedom to customize, tax benefits, and wealth building. So I think that's important to note. All right. This I know is not accurate, but or maybe it is, Teresa. Maybe you could chime in here. You can tell me. This is just what was put in this PowerPoint a while ago, but you know, the historical interest rates and today interest rates have definitely changed. So again, we are in historical lower interest rates. Okay. This just gives you a picture of like owning versus renting. This just gives you an example. Say you purchase a home for $250,000, you pay $1,200 per month towards your mortgage, and then total over a year, you're paying $432,000 for this house. You own an asset that has grown in value well over this amount. Whereas if you're renting, you're paying that same $1,200 a month towards the landlord's mortgage, and you're still paying the same amount over the 30 years, and you own nothing, right? So this is something to really consider when you're thinking about renting versus owning. Okay, so there are going to be some reasons why you may want to hold off on buying, okay? One of the major reasons is because maybe you're changing jobs, right? This is a common thing that comes up a lot, where you're changing jobs and you're starting, maybe you're going to be relocating, right? And it may not be worth it if you're going to be only staying in the home for a short term. So that might be a reason to consider holding off. Another reason is maybe your credit and you don't have enough down payment, right? These are just things to consider. This doesn't mean you shouldn't buy, because you definitely should. And I believe everyone deserves to buy a home and own a home. But maybe this will just, because of financial reasons, maybe your income isn't high enough. There's going to be reasons why holding off. Buying might be a good idea. Another reason why it might be important to hold off is because maybe it's going to be too expensive. Maybe you're just going to be putting a lot of money into this house and you won't have enough money to live, and nobody wants to live like that. Okay, so that might be another reason. Another reason might be, again, kind of going back to the changing jobs. Maybe you're just going to have short-term ownership, right? And so it's not going to really allow time for you to build equity and to appreciate in your value. So if you're only planning to be in a place for a year or two, it might not be the best idea to buy right then, right? But again, still putting yourself into a plan to be able to purchase in the future is always a good idea. Okay. All right. Now I know that this one's accurate. So the realities of our market is that this was what MLS sent to us 2 days ago, which is that the average home price is um, 571,641 in the Phoenix metro area. And we have learned that the buyer's market versus the seller market is that it slightly favors sellers right now, but we're so much more balanced than we were a couple years ago. Okay. But overall, that's what they're saying. But I think because the interest rates were higher, it helped to balance out the craziness of all the buyers that were trying to purchase homes all at the same time. In that market, I was writing offers on 10 homes for a buyer before they would get into one, because a lot of these houses had multiple offers. I'm talking like 5, 10, 15, right? Now I'm seeing that we might be the only offer or maybe 2 offers. So I'm seeing that this buyer's market versus the seller market is really balancing itself out. And this was the interest rates I was told for that were the average a couple of days ago was 7.14%. Is that correct, Teresa? Is that right? Okay. And the growth of the area is just really significantly increasing. If you're in Arizona, you will see, just driving around, there's so much new construction going on all over the valley, especially when you get out into the outskirts. If you're going to East Valley or West Valley, or if you're going north or south of Phoenix area, you're going to see so many new build construction going on. I know where I live out in Santan Valley in the east side, there are new build communities and master plan communities going up all over. I believe there's going to be about 4,000 new homes just around where I live, going up within the next 5 years, which to me is crazy and insane. But it's awesome because it just shows that people are still loving Arizona. There's so much great things, being brought here, lots of jobs, things like that. So, okay. So there's 10 easy steps to homeownership, and we're going to go through those today. And I'm just going to run through this list real quick. You decide to buy, you find your agent, you secure your financing, you identify your criteria, you find your home, you make an offer, you perform due diligence, you close, you move in and protect your investment, and you enjoy service for a lifetime. Okay, so the step 1, you decide to buy. That's the number 1 thing. I mean, it's all about, like I said in the beginning, you just make a decision to purchase a home, and and that to me is the biggest step, because that puts it in your mindset of making it happen. So decide to buy. And, deciding to buy is really a great decision because it lays the foundation for financial security. Okay. And you're going to build a lot of equity, right? And here's just kind of a little graphic that just shows you from closing day that you're going to have your asset paid off in 22 years. And then by the 30 years, you'll have it paid off. Step 2, you find your agent. So your agent's going to really guide you and direct you through the whole process. They are going to be pretty much your go-to person, okay? They're going to help you. They collaborate with your lender. They collaborate with the title company. They help you with negotiations when you are trying to purchase. Either you'll negotiate with the seller on all kinds of things, including repairs, purchase price, and, terms for your purchase. So it's really important to have a really good agent that's going to be really supportive and help you through the process. So as your buyer's agent, I educate you about the market. analyze your wants and needs, steer you to homes that fit your criteria, coordinate the work of other professionals, negotiate on your behalf, and solve any problems that may arise. Okay. We will send you an agreement that sets mutual expectations in writing, commits me to find the perfect home for you, and confirms exclusivity between both of us. So when do you hire your agent? As soon as you decide to buy. It doesn't matter if you're going to be buying in 3 years or if you're going to be buying tomorrow. Okay. You hire your agent the minute you decide. It's so important to start a relationship with your agent right away. And I personally like to help people from the minute that they decide. There are people that I've helped that were thinking about buying 4 years ago who I just closed on. So it's never too early to talk to an agent. When I was looking for my home, I spoke to my agent for a couple years and just asked a lot of questions because I was relocating out of state. And so it took me a while to finally get to the finish line, but it was because, I was in a process. So it's never too early to have that relationship. Okay. All right. So I'm going to skip this part. Step 3 is to secure your pre-approved financing. So at this point, what I'm going to do is I'm going to turn the time over to Teresa because she's going to tell you a little bit more about the financing side of things. Let me see if I can get it so you can share. Hold
That would
on.
be great. Thank you so much, Amy. That was such a great introduction to the financing part. Can you see my screen?
I can. Yes.
Yay. All right. Well, let's get this started. All right. So my name is Teresa Dempsey. I'm a senior loan officer with Fairway Mortgage, and I'm just delighted to be here with you today. Thank you, Amy, for the opportunity to talk to the people on your webinar. I have been in this industry since the 1980s. I know I'm dating myself, but that's okay. It gives me the opportunity to share my experience with you and why I am so passionate that people should move from renting to owning. There are so many benefits, and let's just talk about them real quick. You always hear that there's financial benefits, but what are those benefits? What does that mean? How does it actually impact your wallet? Well, I've got a few examples for you. The first is a forced savings account. So as you make that rent payment every month, you are indeed paying a mortgage. It's just your landlord's mortgage instead of your own. So you're reducing his mortgage balance instead of reducing your own mortgage balance. If you were to purchase a home for $400,000, a little bit less than the average that Amy was talking about, with a 3.5% down payment, that's a minimum down payment, you would reduce your own mortgage balance and increase your equity by almost $4,000 a year. And that's just in the first year. The way mortgages are set up, in the very beginning of the mortgage, you spend more money on the interest and less money on the principal. But the further you go down that amortization, you end up putting more and more towards the mortgage and less towards the interest. So it's $4,000 the first year, it'll be higher the next year and higher the next year. It's a forced savings that increases year after year, even though your payment stays the same. The next financial benefit is appreciation. And Amy, of course, is going to be your expert here on the rates of appreciation. I'm just going to talk in very general terms. In Arizona, we often see much higher than average appreciation. But if we just look at a national average, considering recessions and booms, we can look at an average of 3% in appreciation. So if you're buying that same $400,000 house, the very first year, you may gain about $12,000 in appreciation alone. right? And then it's like compound interest is. This is compound savings because now your home is worth 412,000 instead of 400,000. So the next year, that 3% is going to be even worth more. And again, 3% is a national average. It's usually quite a bit higher in Arizona. That's Amy's area of expertise. And the third area of a financial benefit is your tax savings. Now, I put together a really complex example for you of what an average couple might save. Unfortunately, it's so subjective based on your income, your tax bracket, how you file your taxes, whether or not you itemize, that I don't want to look like I'm giving tax advice. So I'm just going to say that in general, the example I came up with, if you itemize your tax returns on a $400,000 house and you're making an average income, you could be saving about $2,300 a year in tax benefits. Again, just a rough number. But if we add those three things up, your forced savings account for the first year, your average appreciation for the first year, possible tax savings for the first year, you have increased your net worth by almost $20,000 in just 1 year of owning a home versus renting. This is why they say that home ownership is the best way to build wealth in the United States. Most of us are not going to get that kind of a return on the investment in a stock market, right? Or in cryptocurrency or whatever it is that you're into investing. This is going to be a much higher rate of return. And remember, with appreciation, you're gaining that 3% rate of return on the entire price of the home, even though you only invested 3.5%. There is no other place you can invest your money and get that kind of return. So just from an investment standpoint alone, I think it's so valuable to move people from renting to owning. It's just so good for you. Now, there's another benefit that I personally think is important. And you can take this or leave it as you see fit, but it's about your family and it's about raising children. So according to a study done from Harvard University in 2001, homeownership leads to higher cognitive and emotional support for children. Cognitive outcomes 9% higher in math and 7% higher in reading. Behavior problems are reduced, and it results in higher education levels overall and higher future earnings for your children. Who doesn't want this for their children? So that's why the American dream is so important. You can see the quote from Wendell Pierce. Move my screen a little bit. That it is the heart and soul of the American dream. Home ownership, the idea of being able to buy a home and start to build your family. So something I feel very passionately about. That's me just on my high horse about why homeownership is so important. Now let's talk about how we do it, how we can make the financing part of it work. You can still see my screen, right, Amy?
Yes.
Okay. It stopped moving for some reason. Just give me
Oh,
1 second.
always technical difficulties.
I know, but it only takes a moment. There we go. So first, let's talk about FHA financing. FHA financing is such an advantage for first-time homebuyers because we only have to put 3.5% down. So again, I'm going to stick with this example of a $400,000 home, but obviously you could be looking at a lower sale price. So with a $400,000 home, we'd need $14,000 for a down payment. We need a minimum credit score of 580, but I really don't recommend we move forward at 580. There are additional steps required if we're at 580, and it's not hard for us to do some credit fixes over a few months to get you to that 620 or 640 range, and we can eliminate those extra hurdles that you'd have to go through. Now, the max loan amount we can do in FHA is about 530 right now. But again, we don't need to go that high. There's a lot of homes out there for less. And then the important thing a lot of people are concerned about, well, what is debt to income? How does that work? So when we're looking at debt to income, we're going to compare these on a monthly basis. What is your monthly gross income? And what are your monthly obligations? And those obligations include student loans, credit card payments, car payments. What is the minimum monthly payment you're obligated to make? Those are called your debt service obligations, right? How much does it cost for you to service that debt? So once we figure that out, what is that minimum required that you're obligated to? Then we can calculate how much of a mortgage payment you can make. We combine those, and those can't exceed 50% of your gross income. When we're talking about gross income, we're talking about the amount that you make before taxes come out. So if you make $5,000 a month, maybe between you and your partner or by yourself, but of course you've got taxes and deductions that come out of there, you could afford $2,500 in house payment plus your other obligations. Now, I've got a little asterisk there because it's important that you understand the guidelines don't let us go up to 50%. The guidelines will say something much lower, like 36%, 40%. But generally, through automated underwriting, we can get up to 50% approved right now. So that's where it stands right now, always subject to change, but it's something we can do. So if you have questions on that, please, I'd love for you to reach out to me to talk about it. Now, the FHA program does allow us to use down payment assistance. It's something that Amy mentioned briefly in her presentation. I'm going to talk about down payment assistance programs a little bit more as we move through this financing section. But it's important that we get your credit score to at least a 640 to apply for down payment assistance. Amy also alluded to other ways of getting a down payment together, and that includes getting gifts from family. With an FHA loan, your family could lend you the entire 3.5%. They could, excuse me, I need to correct myself. I said lend. It's gift. They need to gift you that money. Okay, you're not paying it back. It's a gift. So it's wonderful that FHA allows us to do that. We just have to have a gift letter signed that this is a gift for you to buy your home. Now, seller concessions are allowed up to 6% with FHA. And what that means is you can make an offer to the seller that will buy this home for this price if you help us pay our closing costs. That's a great option with FHA if, and only if, Amy thinks you can get the offer approved that way. It's a waste of your time if it's a really competitive market and they're getting 12 different offers on the house and you ask for concessions, they're going to take an offer without concessions, obviously. But if Amy feels that you've got some room with this particular seller and you want to ask for concessions, it's a great way to get some of your closing costs covered. Is that fair, Amy?
Yes, absolutely. Yeah.
Very good. Now, the other thing FHA does is they allow us to use what's called a non-occupying co-borrower. In other words, your mom, your dad, somebody can co-sign on the loan, and we can use their income as well to help you qualify. Let's say your debt to income ratio is a little too high because your debts are higher than your income. Well, if mom or dad has strong income, maybe they can help co-sign, and we can make that total average get to 50% or less so that you can qualify. Now, with FHA loans, of course, we're talking about primary residence only, and that's what you would be doing, right? Because we're talking about you buying your first home, not an investment property. So that's FHA in a nutshell. I'm going to talk about other programs as well, but keep this one in mind. It's really my recommendation for a best program for first-time home buyers. So next, I want to talk about conventional. And it's funny, conventional really does allow us as first-time home buyers to have some advantages. As long as you're a first-time home buyer, we can do a down payment as low as 3% with a conventional loan. Now, a minimum credit score is 620, but conventional is going to be much harder on us with low credit scores. They're going to do something called loan level price adjustments, and that can sometimes make our interest rate really not worth it to go with conventional. It will look much better to go with FHA at that rate. But it does allow our maximum loan amount to go up to $766,000. We can still go up to a debt to income ratio of 50%. We can still work with down payment assistance program. Gifts from family are still allowed, and some seller concessions are still allowed. So conventional is still an option for first-time home buyers. It's just something we have to look very closely at regarding your credit and whether it makes sense for you. So that's where we stand with conventional. Any questions there, Amy?
I don't think so. Do you think, well, I guess maybe my one question is if a first-time home buyer is looking at an FHA as opposed to a conventional, what would you say the average payment would look different? Like how the payment would look different?
So it's just, that's really going to depend on their credit
Mm-hmm.
because conventional is going to penalize us for credit scores.
Mm-hmm.
And as as the credit score decreases in 20-point increments, that interest rate is going to go higher and higher and higher.
Okay.
Those loan level price adjustments. Where with FHA, we're not going to have those same levels of penalty with interest rate.
Okay.
So that's something we do on a case-by-case basis. We look at, this is where your rate would be on a conventional loan, so here's where your payment would be. And this is where your rate would be on an FHA loan, and this is where your payment would be. So we have to balance those out. There's some other nuances to these that take some massaging. For example, if you're a married couple, but only one person wants to be on the loan, then we kind of want to go with conventional because FHA is going to require us to take both people's debts into consideration, right? So there's a lot of nuances we look at when comparing the two, and it just is something we do on a case-by-case basis depending on the couple and their needs. Does that make sense?
It does. Great. Thank
Excellent.
you. Thank you for clarifying.
Of course. The other program I love to talk about, of course, is VA. And if we have any veterans on the webinar today, first, Amy and all of us want to thank you for your service to our country. We know our veterans and our military families make such sacrifices for us. So thank you for all that you do. And fortunately, you are entitled to some great benefits when it comes to homeownership. You get to do a 0 down payment. You can have credit scores go all the way down to 580. We can do loan amounts up to 766. And quite honestly, we can exceed those depending on what county we're in. In some cases, and with higher credit scores, we could even go higher. So can you imagine buying a $700,000 to $800,000 home with 0 down payment? You've earned that as a veteran, and we appreciate you. We can also use down payment assistance programs. And you might think, well, why would I want down payment assistance if I'm doing a 0 down already? Well, we can use that down payment assistance to cover all the closing costs. So VA loans are just a win-win, especially with down payment assistance. Gifts from family are allowed, and seller concessions are allowed. So again, if you've got that DD 214, you can show that you have the discharge and the eligibility for VA financing. Let us help you. We love working with veterans, love to honor your service and help you get into a new home. So now I want to summarize just a little bit more about the various down payment assistance programs. If I haven't been clear, let me be clear. The down payment assistance programs work with the various types of financing. So whether we're doing conventional, FHA, or VA, those down payment programs are, they go on top of or go with those different lending programs. Okay. In most cases, you get assistance up to 5% of your sale price. Okay. So it can help with your down payment. It can even help with some of the closing costs. Minimum credit score for almost every DPA program is 640. So if you find yourself at a 580, you find yourself even in the 500s, let's talk about credit improvement. Like as Amy alluded to earlier, we can help you get that credit score up. We can advise you on how to improve your credit so that you can qualify for down payment assistance. Now, yes, with every great opportunity, there's always some downside. The downside with down payment assistance is the interest rate is higher. So now the entire loan amount is going to have a higher interest rate. And that's how the program makes some of their money back. And they're going to require that you pay that higher interest rate for at least 3 years by putting a second lien on the house. So that lien is forgiven after you've paid the higher interest rate for 3 years. All right. And again, what we do is we look at this and we say, gosh, somebody's willing to gift me the down payment assistance. Should I take that? Or should I do down payment assistance where I'm paying a higher interest rate? Well, let's compare and see the differences so you can make an educated decision on what's best for you. Now, there's also some income limits on down payment assistance programs. So if you're a young couple moving up the corporate ladder and you're making $150,000 a year, there's a chance you won't qualify for down payment assistance. But let's look at it on a case-by-case basis. And some of these programs are not available in some counties. So it's just something, again, we're going to look at your circumstances, where you're buying a home, and make sure that the program you want is available in the location that you want. Any questions on these, Amy?
Not at all. I mean, other than just, I guess maybe I do have one question about that. So if the down payment assistant comes with that higher interest rate, so are they not able to refinance earlier than that 3 years? Is that how it
No,
works?
so we got caught. That's what we were doing when down payment assistance programs first came out.
Okay.
So we'd close escrow, and then after they made their first 6 months payments, we'd do a refi.
Oh, okay.
And then the down payment assistance companies came back and said, well, whoa, wait, we're not recuperating the money that we gave them up front. We're losing money.
Right.
And
Okay.
if we keep losing money, we can't stay in business.
Okay.
So they
Makes sense.
changed the rules, and they now put a second lien against the house for that down payment that they gave. And as long as that higher interest rate is paid for 3 years, then they forgive it and you don't have to pay it back. Now, there actually are some down payment assistance programs where it's never forgiven and you pay it back later when you sell the home. And then in those cases, you don't have to pay quite as high of an interest rate. But we have to weigh that out. Do you want that lien against your house the whole time, or would you rather just get rid of it within the 3 years? So case
Makes a
by
lot of
case
sense.
basis. Does that make sense?
Makes a lot of sense. Thank you.
Excellent. Thank you. So obviously the goal is to get you into the house of your dreams, get you in a better, stronger financial position, a great opportunity for your long-term raising your family, building a life, and being able to, change wallpaper, change paint colors in the house, and have your own garage, and not have to worry about the upstairs neighbors or what the landlord wants. Getting those keys, home ownership is the ultimate goal. So that's just my 2 cents on how we get this program started. Again, I'm Teresa Dempsey, a senior mortgage consultant with Fairway Mortgage. I have an app that's a great way for you to play with numbers. If anyone wants my Fairway Now app, just let me know. And if you scan that QR code, you can see my client reviews. I'm committed to what I call a happier path to homeownership. And that involves a more thorough pre-qualification up front so that you can buy with peace of mind. With my pre-qualification, we can close escrow on time, and you will end up a very happy, borrower, happy buyer when you close escrow and get those keys. Again, check out my reviews by scanning that QR code and contact me anytime with questions. That's my cell phone. Text me, call me, email me, whatever works for you. That's all I have today. Unless there's questions, I'll turn it back over to you, Amy.
Thank you so much. Appreciate that presentation. That was very educational, very helpful. Thank you. All right. So let me get myself back here.
I'm going to make host back to you.
Yeah. I wanted to turn the time over to Kim from Magnus title. I think I said Driggs. I'm
That's
sorry,
okay. Thank
Kim.
you. No worries. No worries.
I thought about it at first. I think, oh, I said the wrong one. Anyway, been doing a lot of contracts lately. Okay, so Kim, please, talk a little bit about what you are doing, how you support a buyer through the process of obtaining ownership in their new home.
Yes, yes. Well, thank you very much. Gosh, by the way, Teresa, that was a great presentation. I really enjoyed hearing all about the different loan programs, especially the DPA programs for the down payment assist, because many times we get involved when we are helping the buyers now sell their home and they've got a down payment assist loan there. So we deal with them getting those zero demands and having such a great program where they get to get rid of those things. So that was fun to hear from your side. Thank you. But my name is Kim Evett. I'm with Magnus Title Agency. I have, like Teresa, been in the business since the 80s. And yes, it's as we laugh about it, it's been a long time. We've seen many changes in the industry for sure over those years. But escrow gets involved in a transaction in that we are instruction takers. So we are a mutual third party that takes instructions from the contract. So from the buyer, the sellers, the agents, from the lenders involved. And we as escrow have to make sure that all of those instructions are followed and each party holds up to their end of the deal. And we also then accept monies into the transaction. And once we have seen the contract through and all parties have done their due diligence, and at that point, we can close our transaction, and escrow is the holder of all monies as well. So anytime we get a transaction started, we get in contact with you, the buyer, as soon as possible, because that earnest money, to keep that seller happy that you have deposited your earnest money into a transaction, needs to be deposited right away. Generally, it's a 24-hour process. Many times the contracts state that the earnest money is due on acceptance of offer. So we will definitely be reaching out to you, the buyers, introducing ourselves and letting you know who we are, giving you all of our contact information. And at that point, we're going to talk about all of the earnest money options. We have several different options depending on how long or short term your escrow transaction would be. So we will give those different options to you and figure out along with your purchase contract what exactly type funds we need to collect from you to keep in time with our contract. We would have the options of perhaps taking in a personal check for an earnest money, or it would be a cashier's check if we've got a quicker transaction, or some people don't have checkbooks, as we all know. So many times we're getting cashier's checks from the clients, or there's also wire transfer. So we can work out whatever earnest money situation works best for your particular situation. Most importantly, if we are going to be doing a wire transfer, we want to make sure that we get you those wiring instructions via a secured, safe email. And that is where we all have to be very careful with is the wire fraud. So we will make sure that we get you those instructions via a nice secured email. And then it's always a great idea for you to give me a call and we will go over the information verbally. That way we know that you've got the correct account information and you can then transfer your funds into our escrow. Those monies will sit in our escrow and we will hold on to them The next step that we will do is we will work together to get you particular reports in time. Title insurance is part of escrow. We kind of wear the same hat. I'm the actual escrow agent, and I work with the title examiner or the title officer. And the seller is going to purchase a policy of title insurance for you so that you can ensure that you are purchasing that property free and clear of any and all liens. So about, I would say 24 to 72 hours after we get your escrow opened, we are going to send out a preliminary title report to your agent as well as to yourself for your review. And we want for you to take a look at that. In that title report, there's going to be some particular links that are very important to you to review the CCNRs, if in fact you're in a homeowners association. And you're also going to want to take a look and make sure that there's no easements that run other than along the outer skirts of your property. And of course, your realtor or myself can help you view those transactions and those preliminary title reports to make sure that the items there are for you if you're questioning and to clear up any questions. I know they can be very confusing, but we will definitely do that. And you've got it 5 days from receipt of that title report to review. From that time, we're going to kind of be a little bit quiet on our end because you're going to be working directly with your lender, if it's Teresa or the lender of your choice, and providing many, many documents to get you approved for your loan. And so we try to step back a little bit, make things a little less stressful for you as the buyer to give you plenty of time to work with your lender to provide all the items in order to be approved, and as well work with your agent as far as making it through your 10-day inspection period. However, in that time frame, if you have any types of questions, we're definitely always here for you to answer them. But from that point in time, the next time you'll probably hear from us as the escrow agent would be when we're close to the end of the transaction, when we've got your final loan approval. And we now have your final figure needed in order to close your transaction, and your lender will have sent us some loan documents. So escrow agent is the coordinator of the signing of your loan documents, whether it be here in our office, or we can get you set up and scheduled with a mobile notary that can come out to you. It's kind of a great thing if you have a very busy work schedule. We have mobile notaries that we can hire that can come to you morning, noon, night. They work 7 days a week. So if you're a very busy person with your job or your family and you just don't feel that you can get away to make that loan appointment here in the escrow office, we will get that all scheduled for you. Closing funds. I always like to bring this up. The closing funds that we need for Arizona good funds law would either be in the form of a cashier's check or a wire transfer at the end of your transaction. If you think that you will need to rely on a wire transfer, many of the banks don't have a cashier's check that you can walk in and get. We're doing a lot of the online banking systems now, so you'll need to order a wire transfer. You'll definitely want to check in with your bank a couple weeks before close to be sure that you're aware of their time frames, what they might need from you in order to get that wire transfer started. Some banks require you to come in person. Others may allow for you to order those online. So every banking institution is different. So I really encourage everybody to check in with their financial institution to make sure that they've got all of that, the procedures down so that you know what you're doing and you're not last minute frantically trying to get your funds into an escrow transaction and possibly causing delays. So it's always a good idea. We will have provided you the wiring instructions at the beginning of the transaction. However, we are more than happy to provide them again to you via email, again, secured email, and then we will go over those instructions with you as well verbally, just to be sure that your safe and hard-earned saved monies are coming to the proper destination for the close of your escrow. But you know, the escrow process is very simple. we don't get involved a whole lot other than from the beginning and the end, but we're definitely here the entire process. We work very closely with your lender, your realtors, as far as the coordination of the transaction. It's just that you as the buyer may not quite be involved or from the beginning to the end as far as with the escrow agent. But I always tell you, we are always here to help you through any questions that you might have, or even if you're not sure who to ask, feel free to give us a call and we will direct you in the right direction as to whom you need to get to. But if I could bring anything to a buyer for the escrow portion, is just to be very, very careful with the wiring information. I always like to bring that. I know that Amy, as a realtor, has a form, even your wire fraud advisory form. So we just like to bring that to the point, and we are definitely, like I said, always here to be of assistance.
Yeah, I think it's a great point you bring up with the wiring, because I know that there's been a lot of wire fraud that's occurring. And, I even had somebody try to fraud me with my Amazon, saying somebody was purchasing on my Amazon account this laptop and wanted all this information. And, the fraudulent things that are going on out there are, you have to be very aware and very cautious. So I always recommend, when it comes to those funds, to call you, Kim, directly and just confirm
Yes.
wiring instructions, and that can solve problems in the end. So I don't want people
Absolutely.
to be scared, but at the same time, just be very aware and just confirm, confirm, confirm. I think it's a
Yes,
big deal these days. So thanks for sharing that.
absolutely.
So yeah, I think that's a lot of great information. I think it was a lot, but at the same time, it's, a great overview of what a team does in order to support you to purchasing, in purchasing your new home. So I think it's really important to just be aware of all of the things that are involved. And obviously, it will seem overwhelming, but at the same time, you have a big team who will help you every step of the way, from me as your agent, from Teresa as your lender, and as Kim as your escrow officer. We all are there just to support you through the transaction all the way to the end, to the point where you sign your papers, you become a homeowner, you get keys to a home that you get to build financial security with and to live in and to create as your own space. And that's really the whole goal. So I hope this has been very informational for you all. Obviously, if you have any questions, feel free to reach out to myself, to Teresa, to Kim, to any of us. We're there to help you with any questions you might have. And, and it really doesn't matter if you're going to be purchasing a home, soon or in years ahead. We're there for you through the beginning to the end. And we'll make sure on the replay of this to put our contact information so you have it, so that you know where to reach each and every one of us. And thanks again, everybody, for participating.